Hi guys, Lee here from Trading College with your Monday morning look at the market. It is the 11th of January. We're going to dive into these currency pairs. In fact, we're going to look at some gold as well. We'll look at the stock markets. Make sure you subscribe to the channel, guys, because we're going to be doing this every Monday morning. The video is time sensitive because I'm looking at current price action. So if you're watching this video down the line, then please bear in mind that price has moved on from there. Okay, so we're going to look at the dollar, we're going to look at the euro market, we'll look at gold, we're going to look at the stock markets, of course, and see where we are this Monday morning. And I think I'm going to start here with the dollar and the dollar basket. Remember, it's pretty much weighted towards the euro here as well. So we're going to look at the pound US dollar, and it's not so much weighted towards the pound US dollar, but we'll look at that in 1 second. You can see that we've had a very nice move down, making lower lows and lower highs on the dollar basket, but we come right into one of our targets here on the Pro Trading System, 89.20. We spoke about that last week, in fact, right into an area of support of 2018. So we're seeing the dollar start to push a little bit higher here, and in turn we've seen the euro sort of roll over a little bit. I've been mentioning that divergence in the euro, and we certainly saw a little bit of a pullback yesterday. But is this a game changer? Is this a trend changer? Well, you know, normally with double bottoms or double tops, you do tend to get a decent kickback rally, just like here. I mean, this was a major double top drop, and we sold off very hard for 2020. But now we're in this double bottom area zone nearly. I'm not quite sure that this move to the downside is over yet. It may well be, but I'm looking for maybe a little bit more of a move down to 88 on the dollar basket. You know, we're still making lower lows and lower highs. I'm not quite sure yet that this trend change is over. What would make me think more that we're going to get a bigger bounce on the dollar would be, here's the daily chart of the dollar, by the way, would be a bit more of a move higher, bit more of a pullback, and then we don't break below that 89, and then we make a new move to the upside. Every time we rally, we've sold off. Every time we've rallied, we've sold off. Every time we've rallied, we've sold off. So watching that really carefully, I'm not convinced at the moment that we are in a new push higher. We could be, but we'll have to see that pattern. Now, I've been talking about the euro against the US dollar over the last several weeks. I've been talking about this three-way divergence here, and I played this last week, looked for shorts. You know, we did a really nice move, took about 60 pips out of this overnight, which was a nice move. And then we're down to the 121.61 on the Pro Trading System. We could go a little bit further, but what I'd like to see is a bit of a kickback here. As long as we don't get above this prior high, which is, let me give you the price, which is 123.50. If we rally a little bit higher, then we could roll over from there. All right, so we could roll over as long as we don't go above that previous high. So this next move up in the euro dollar is going to be crucial, because it could then turn around and not reach those new highs and start to roll over. So watching that closely. Let's go and have a little look. Let's jump to the German DAX, because I mean, it's been an incredible move. You've got to see this on the weekly. You take a little look at this. Now, I've adjusted a trend line. I had a trend line across these highs. For 2 weeks ago, it actually stalled at that trend line. Then we busted through it with more buyers stepping in last week. And now I've just readjusted this new trend line, taking a couple of reference points here, the April-May one to the early 20 COVID move down. So we're sort of in this area again. You know, I'm looking at this thinking, really, what pattern can I see that is going to reverse this market? Do we have a major two-wave divergence down the lows? Not really, because it's those angles of the divergences that I want to see. I want to see a nice 45-degree angle. Here, it's pretty flat. What about on the monthly time frame on the German DAX? Well, this is where it starts to get a little bit more interesting with the three waves divergences. You can see that's quite a decent angle, and we've got that trend line here. Now, what you'll notice if you do some back testing, if you look at channels, triangle patterns, you tend to get an overshoot of that trend line. So if you draw a trend line across here, a wick right there could be quite significant. If we actually stay below, we close below that for January, that could be seen as a bit of a fake out breakout, maybe an overthrow into that at that area there at 14,000, and then we could come back inside. So that's still on the cards, that three-wave divergence. Three-way divergences don't always work. That's why the stop's in place, to get you out just in case it goes wrong. But there's still, opportunities where you could just creep higher, but that three-wave is there. We've got to be just aware of it. And I think the most important thing as we trade at the moment is just to be flexible. Be flexible. Don't get stuck in your ways that the stock market's going to continue higher forever, because it won't. They're 100% sure that the stock market will not continue to go higher forever and ever and ever. I know they're printing money and they're just pushing these markets up because of the Fed and the Bank of England printing more cash, which is perfectly fine. But we will have a decent correction at some point. Just don't try and pick that top. Just be flexible. We want to make lower lows and lower highs in price action first, really. So looking at the FTSE, we'll take a look at the weekly time frame on the FTSE. Been a beautiful buy. We continue. We hit 67.81 last week. Massive week last week in the FTSE. It started Monday straight out the gate and we just exploded to the upside. Green PTS, I can't do anything until I get a red. It's still bullish. And continues to push higher. It does feel like, though, if I look at the daily on this, and I do a bit of Elliott wave stuff as well. You could look at this. I don't know. It doesn't look really clear, but you could look at this as some sort of Elliott wave count. I mean, wave 3 is never the smallest wave, so you wouldn't really bring that into the equation, that count. But it just feels like it's a very nice impulsive move higher. Got maybe a three-way pulling down. Just a nice pullback is due. And I think as traders, I don't know about you, you want to make money quickly and you want to make money and returns as quick as you possibly can. When the markets are pushing higher, when the stock market's going up, the volatility is low, isn't it? It feels like it's low. When the stock markets drop, like we had in the COVID first move, the volatility picks up, the VIX increases, and the volatility really does increase, and we see the stock markets dropping lower. As the markets go up in value, the stock markets go up, it's just a steady stair-step climb, isn't it? And I think that's why you get a lot of people that really enjoy it. A lot of established traders enjoy shorting the market because you make money much more quicker with the move to the downside, because fear is a bigger emotion than greed, isn't it? And so those markets push down. So if we do get a pullback in the stock markets, which we will get a pullback in stocks, we will get this is the Dow Jones, we will get a retracement, we will get the markets coming back at some point. The market I would like to look at is the euro versus the yen. And with the euro yen, let's take a little dive into the euro yen. If I just scrunch the chart up here, the euro yen has had a really nice move. It's been, we consolidated for a while, but then we broke out of this area. Now, with the euro yen, we've got multiple divergences, just like here, where the market's sold off, a couple of hundred pips. We've got a three-wave. Three-wave divergences are so much more powerful than the two-wave divergence, because as the market continues, it exhausts itself at the highs, and then the momentum indicator cannot get to those new highs. So I'm watching euro yen, and I'm watching euro yen for a decent sized couple of 100-point moves. And if you look at the weekly on euro yen, I scrunch the chart up because you can see if you scrunch the chart up a little bit more, but you get more data to look at, and it gives you those angles better on the momentum indicators. You can see here that we have a decent two-wave. Okay, when you get decent two waves, markets do have some type of pullback. So I'm going to be all over the euro yen and start to, if I get a signal, as we're starting to do here, lower highs on the 1 hour chart, lower highs here, another red PTS here to the short side, I will short that market, guys. All right, we'll start to nibble on the trade. When I mean nibble on the trade, I mean I just start to scale in, buy certain positions at certain areas. Okay, all right. So, Euro Yen for me is the one. I think if we see the stock market sell off, Euro Yen could be the market that, will be the market that I will participate to the short side in. We're going to take a look at gold, and we forgot the gold market. We'll take a little look at that. And we said it's vulnerable, didn't we? We spoke about it being really vulnerable last week. We're back once again. We were back last week to 61.8% on the fib. So at the moment, on the weekly chart, we are making a lower high. Now, if we start to make a lower low here, which is 1764, you've got to keep your eye on, then we could see much more downside. All right. And, we could see gold sell off really hard. A lot of people are long gold. We shall see, because if they start to see their stops being hit, that will fuel the move lower. But from a monthly time frame, it's really bullish still. I can't see a new downtrend in the monthly chart, which is the longer term investment chart, but on the weekly I can see a decent sized correction. Look, before we go, guys, we've got to definitely look at the cryptos, because I don't know about you, but I'm getting all my mates talking about buying crypto. I'm going to buy Bitcoin. One of my friends, again, this happened last week. One of my friends said, I'm just liquidating some of my funds I've done with an ISA or whatever, and I'm going to put it into, I'm going to buy some the Bitcoin market. And it was there last week around this area here. Remember what happened before? We got to nearly 20,000. Everyone was buying it before. And friends of mine were saying, shall I buy Bitcoin? And it's the crowd coming in, isn't it? It's the crowd coming into the market once again, right at the highs, at the top maybe of this short-term correction. And I said, no, you're going to probably at some point here you will get some pullback and get it, buy Bitcoin cheaper. If I look at the weekly chart, you can see that it's just exploded higher, and a reversions back to the mean wouldn't go amiss. We broke above 40,000. Even if you just sat tight at the end of last week, it was trading at 39,000. It's gone all the way back to 32,000. So you would have got into the trade, and I said, don't buy it last week. Just wait for this week if you want to get into the trade. And he would have obviously got it a lot better price. But the real value, Bitcoin is a 40,000 priced market to trade, but get into Ether. Ether's the one. I mean, Ether's trading. It's above the let's just delete that. It's above. We got above this 1000, 120, 113 here, 130. So this is the way they priced it in pro real time. So this pullback here, I would add to my position again. So if I can get a little bit more of a pullback here, especially the round number 10 here, I would then go and buy some more Ethereum. Okay, and we're pretty much very bullish on the cryptos, but timing is crucial. Unless you're going to get your head down, close your eyes for a couple of years, make sure you manage risk at all times. And don't forget, I mean, you probably know already, but the spread betting brokers have banned retail traders for trading the cryptos. I know there's going to be some brokers out there where you live that obviously that obviously allow you to trade cryptos. But when it comes to the brokers here in the UK, retail brokers have been banning retail traders. Retail brokers have banned the retail traders, of course, like the IG Index, CMCs, and so on, the big players, for banning the crypto markets. Okay, not allowing retail traders to trade those markets anymore. Unless you're a pro trader, if you've got a pro account, you can trade these markets. Okay. All right. So I think I still think this was the initial move. Okay, this is wave 2. We're in a wave 3 now. Wave 3 of 3. Okay, so I think much more upside in the cryptos. It's just your timing is crucial. All right, so just to summarize, I've gone over time here, sorry about that. I'm looking for Euro Yen, looking for an opportunity to short that market, and I am looking at the stock market to have a little bit of a correction. We'll see how the US market opens up. Probably push it much more higher. but we've got to have a correction at some point, and a correction in the Dow could be like 2,000 points, so it's tradable. All right, speak to you soon. Have a great rest of the week. Take care.